So today we're speaking with Simon Neville. So Simon is the Group Treasurer at Reckitt Group plc, which has recently been rebranded as Reckitt. So Reckitt is a global leader in consumer health, hygiene and nutrition. At some stage, nearly everybody on today's call will either have bought or used some of Reckitt's products. So they're the makers of Dettol, Finish dishwasher tablets, Durex, Lemsip, Nurofen. That's just a few of their power brands. Reckitt has revenues of 13 billion, over 40,000 employees, operates in 60 countries and has sales of almost 200. So as the Group Treasurer Director, Simon has successfully managed more than 30 billion in financing related transactions, including multiple bond issuance and share buybacks. In addition, Simon is very lucky. He's had first-hand experience with cyber attacks, acquisitions of 20 billion and disposals of about 5. So at Reckitt, Simon has developed a value-adding group treasury and insurance function with his team awarded Team of the Year by the Association of Corporate Treasurers in 2018 and Deal of the Year for his work on the Mead Johnson acquisition financing package in 2017. Prior to this appointment at Reckitt, Simon worked in international positions and has held senior finance roles in companies like Jardine Matheson Group, Total SA, Tesco plc, and Tulette Prebon. Simon is a fellow of both the Chartered Association of Certified Accountants and the Association of Corporate Treasurers and holds an MBA from Kingston Business School. Simon, that was a very brief overview of your CV.
Thanks very much indeed, Trina. I think it was very good. Brief is good.
How are you today?
Yeah, no, very good. It's we were just saying earlier, it's sort of one of the sunniest days of the year, or certainly the sunniest day of the last month. So it's great to be here talking with you guys.
Good, great to have you. So I'm going to just go through a few quick questions that I have. Please, can everybody ask as many questions as they have? But my first question today for you is, how does an accountant end up the group treasurer of a Footsie company?
Okay, where to start? So basically, I was an accountant. I'm an accountant by background. So did the usual stuff, and in fact, I was doing consolidations at Sainsbury's, monthly consolidations and statutory reporting, but also managing what was then called the cash and currency team. So Sainsbury's is quite a big retailer and had an operation in the States at the time. And literally someone phoned me up from the head office and said, look, we've heard about this treasury. We're just about to appoint our first treasurer. Would you like to come up to the head office and be part of his team? And I jumped at it, to be honest. I mean, a long time ago now, and no regrets at all. So I moved up into, from Streatham Hill, as it was, a suburb of London, into the centre of London with my team. So the first thing we had to do really was to set up a new team, because people surprisingly didn't want to actually work in London who had been on the team before. So that was good experience. And then we did the first convertible bond done in the UK market at the time. And Sainsbury's was around about a 6 billion turnover business.
Okay. So what attracted you into the profession?
I mean, I personally prefer things that are forward-looking and where you can make much more of a mark, if you like. You get a lot closer to the business. You have to understand the business. And I mean, at the time as well, currencies were a lot more dynamic than they are perhaps today. I mean, we had, within Sainsbury's, wine was then bought in a number of European countries. I mean, like the punt, for example, would have been one of them. But, the peseta or the French franc. So that was kind of good, and it was really being at the heart of the operation, working alongside the buyers on their strategies and pricing strategies as well. So that was particularly interesting, and I just rolled off and just finished my MBA, which had made me much more aware of the whole M&A, the M&A piece, and the need to finance that, and the cost of capital, and all those type of things. So it was a good time, and it was a good moment for me personally.
Mm-hmm. And then for someone that doesn't work in Treasury, is corporate Treasury anything like banking?
We face off to banking or bankers a lot, but we don't. I mean, we have transactions, so day to day we have a lot of flow business. Our flows can be 1 billion or so on a normal day, but we're very different to banks in terms of our risk and compliance environment. I mean, obviously we have to comply with sanctions and money laundering and stuff like that. But our focus is much more on taking the corporate agenda forward. And we're much less, most of the bankers that we'll talk to are very much interested in the deal. In fact, I was talking to somebody the other day from a bank who was considering a career and trying to make the distinction that if we do a deal, it's maybe 1 or 2 or 3 deals a year, where they'll be doing perhaps 5 or 6 deals of maybe a smaller or less transformational size on a monthly basis.
Okay. So like in your role at Reckitt, can you tell us a bit more about that? Like what's a typical day?
A typical day sort of doesn't start massively earlier. I mean, people in banks can start on the trading floors around 6 o'clock and finish pretty late in the day. So our typical day will be somewhere between a 7:30 and an 8:30 start, depending on whether you're someone on the front office at a dealing side facing the markets, or whether someone like me, where my day will be skewed a little bit more towards the end of the day. And really, it involves anything from from the proverbial call from the CFO saying we want to buy something. How can we, can we afford it? But most of my day is routine approvals, checks and balances, oversights. I also manage the insurance team and have some responsibility for the pension fund within Reckitt, as well as rating agencies. So I spend a lot of my time talking to people external to the group, trying to synthesize ideas, if you like, and filter out stuff that is not really relevant to us. And that's probably quite more time consuming than most people would think, sort of coming into it. And to a lot of people, it may feel like a waste of time, but then when you come to a very large transaction, the time that you put in there serves you very well. I'm thinking about what might happen or what may happen in the financial markets and how they may impact us are important factors.
When you're looking at like treasurers, do you think accountants make good treasurers? Like what skill set do you look for when you're hiring?
I think they do. I think it's a blend. I mean, what makes very bad treasurers are people that think it's dealing and speculating. I mean, that is a disaster if you get someone who thinks that's the right thing. I came into it through accounting, and I think all of my direct reports and indeed my successor will be accountants and qualified treasurers. I think the discipline that accounting brings, understanding the accounting impacts of what you do is increasingly important, I think, or at least having a good awareness. It's hard sometimes to keep up with standards, but having a good awareness. And I think it's really the discipline and that control and need to get stuck into the detail and be curious. I think being curious is probably the most important thing. You've got to be interested in what's happening around you.
Would you recommend Treasury as a career in finance?
Well, I'm not going to say no, am I? I mean, yeah.
Fair enough.
Look, it's a good profession. It's got a good balance. You have to like, I think, talking to people. You have to like sort of telling the story, if you like, when it comes to credit or new banks or rating agencies. Making sure that you understand the narrative of who you work for and the messages you want to get across. So yeah, no, I enjoy it very much, and no regrets at all, and really no desire to go back into controlling type roles from a personal perspective. But but I have done it, and I enjoyed. Ironically, I enjoyed controlling when I was doing it and consolidations. I mean, it was very satisfying getting a set of numbers out the door and knowing that they're right and telling the story that sat behind them. That was something that always used to, I used to get something from that.
Yeah. So then on your team, you've won many awards for your treasury team. Like, how did you build a high performance team?
I was lucky that I inherited some good people. Reckitt has a very hard working culture. The culture is shifting to be, I think, a little bit softer and more in tune really with the current what's required in terms of having a business with purpose and the factors around diversity and inclusion, which are massively important for a group in 160, 200 odd countries. So that's important. But I inherited sort of good, steady, hard-working, loyal, diligent people. I built around that an international team to give us much better visibility on what was going on in the business, in the network, and that's proved invaluable and very value-adding. And then strengthened it where I felt it needed strengthening. So bringing in people like a deputy to help on transactions. Because when I joined, the first thing I was given was a 14 billion euro transaction to buy some consumer assets in Europe. And frankly, that is quite exhausting if you're doing it literally on your own, supported by external lawyers only. So it was good to, when we did the Mead Johnson deal, to have someone just to, a lot of it to do the sweeping and make sure you haven't missed anything that, when you have your planning sessions that you say you're going to do. So, yeah.
I'm glad you mentioned the Mead Johnson deal. I wanted to speak about that. How did you prepare for like that size of deal? First of all, to people on the call, like how big was the deal? And then how did you prepare for a deal like Mead Johnson?
Yeah, so the headline numbers for the deal was we put in place a $17.9 billion facility for the core deal, and we added a further $3 billion backstop facility for some loans and bonds that were already in place within Mead Johnson. So that was put in place. I prepared for it, and the team prepared. Me and my deputy basically prepared for it. We had run scenarios with the bank probably about a year before, saying, well, how will we deal with a 5 or a 20 billion size transaction? Those were the two bookends that we chose to look at. We thought anything up to 5 billion we could easily absorb. But anything much beyond 5 billion started to get uncomfortable. We just needed to understand where our pressure points are. So we went through some pricing comparative exercises. We kept very close to the market in terms of what other people were doing. We had Shire Baxalta do a deal probably about 6 months before we did, which was massively helpful because that pushed the envelope a little bit on a component that we were looking to also maximize. And we structured it as effectively, it was almost 50-50 term loan and bonds. So it's called a bridge that we then subsequently took out with bonds. So we did an 8 billion bond issue in June. And in fact, we had the cyber attack 2 days after the bonds closed, which from a personal point of view was massively helpful. I just cannot imagine the added stress that I would have felt if it was there. But I do recall a conversation I'd had with the CFO about why I wanted the money from the bonds to go directly to the banks as opposed to be routed through Reckitt's accounts. And it was simply operational risk. That was my only concern. We'd moved 18 billion or 17.9 billion for the actual deal, and we have that done direct from the banks to the agent. And that worked well. And the bonds, we thought, well, we don't want to sort of take a risk and think that we can do this ourselves. So let's just get it settled direct. But it was really all around the preparation, Trina, basically. It was over and over. It was iterative. It was quite dull doing something when you're not doing a live transaction. But at the same time, that's when you want to make your mistakes and when you want to do your thinking so that you can prepare yourself for hedging and such like, and integration. Because anything really large always has some integration component as well. Yeah.
How did you manage the stress of 20 billion? Like, did you sleep at night? I mean, like, that's a lot of money to be transferring.
Yeah, actually, it was quite strange.
I mean, stressed.
I talked to our controller at the time, Candy, who's now moved on, and she asked me the similar question. And to be honest, I didn't find it massively stressful. The only time when it became stressful was when we had a leak during the process, and it appeared in, I think, one of the UK papers and an American paper. And that put quite a stress on the negotiation because suddenly, in fact, I was in Ireland at the time in a hotel, and I spent probably most of that trip on a phone call trying to recut the documents that weekend so that we were good on the Monday, which didn't go down very well, to be honest, because I wasn't there for a loan negotiating. I was there for a family event. But no, I didn't find it, apart from that incident, massively stressful, other than the actual settlement day itself. And frankly, moving that amount of money, a bit like when you buy a house, you just want to know that the money's arrived and you've got the keys. And it's no different for us, other than it was obviously a bigger number.
Yeah. So then, like, throughout your Treasury career, you've done lots of different deals. What's been your best and your worst deal, Simon?
Oh, well, I wouldn't tell you what the worst one was. I do think the best deal in many ways was the Mead Johnson. I suppose it was best simply because it was very large. It was large. We won Deal of the Year for it. We won Team of the Year for it by the Association of Corporate Treasurers. It was good for the team. It's good for morale to do a transaction of that size. It was transformational for Reckitt. People can argue whether it was a stroke of genius or an act of madness as a transaction, but it was a large, very well executed deal, which won a lot of plaudits from the outside. I think the worst deal I've done was to buy a distressed smelter in Central Europe as part of a private equity transaction, and that was just grubby. It was in default. There were lots of restructurings with the workforce to be done on the back of it. We had banks all over us in terms of putting security on just about everything. But ultimately, it was about getting it done. I got it done, but it wasn't a great transaction, and it didn't end very well for the business. About a year, 2 years later, it wasn't able to be turned around, and it was tipped into insolvency effectively.
Okay, fair enough. You also spoke about negotiation with your deals. How important is it to negotiate in your role? So when you're doing all these deals, how important is that skill?
Yeah, I think it's very important every day. Every day is a negotiation. Someone's always trying to charge you something, and there's always something that you can chip away at. We do have a bit of a reputation as fairly tough negotiators as a firm, but I think the important thing is to know when to stop and to also leave something on the table. You've got to recognise that the banks are your partners, and it's not just a transaction; it's a long-term relationship. So you want to get as tight as you can. The last thing you want is a headline saying that it was a loosely priced transaction, because that's not great for your career. But at the same time, you want to try and do it with a bit of a smile, to be very direct in the communication, be very open, be very honest, and lean in on your partners and expect them to lean in on the transaction. We're very lucky at Reckitt. We have an amazingly supportive banking group. And the relationships are, they're professional, of course, but they're also very friendly. And, I spend time making sure that I can have those difficult conversations in a fairly constructive way when they occur. But I think knowing what the market is the most important part of any negotiation. Again, whether it's buying a car or whether it's buying a multi-billion business, you have to know what you should be paying, and then you have to see if you can beat it, basically.
Yeah. That's fair enough. Now, during Brexit and COVID, I kind of want to move on and talk about that for a little bit. How has the Treasury function changed?
Well, we're all working remotely, clearly. I mean, that would have been one of our disaster scenarios. We've got a disaster recovery plan, business continuity plan, whatever you call it, that we run every year. We update on a regular basis. It served us in good stead when we did have the cyber blackout. And really, COVID is just like a massive business interruption. Well, that's what it was at the early stages. And now, we're all on these calls, and this feels almost normal. I mean, you and I know each other, so we can talk almost normally on these things. And you go to social events on a Zoom call, and it's not obviously as good as the real thing. And some people in the team don't like turning their cameras on. Some people do like turning it on. That's difficult. It's quite intrusive. I think people at the beginning found it intrusive into their personal space, particularly if you're working out of a kitchen or working out of your parents' house or a bedroom or one bedroom flat. That's tough. And I think you just have to try and cut people as much slack as you can and try and make light of it where you can. So COVID's okay. I mean, I've actually gone back to the office on a fairly regular basis. I try and go in every 4 or 5, 6 weeks, in some way just to connect. I think it's quite useful. I mean, there's some admin stuff you need to do, or to replace a laptop where you need to go in. But I think it's really going to be important that people are connected with their workforce, workplace. So for us, that will be some sort of hybrid model coming out of the back of COVID, hopefully later on in the year. I don't think anybody's going back to the office permanently. Everybody knows it works. But, the whole collaboration, coaching, corridor conversations, lunch with colleagues, you miss that. You miss that a lot. So I think a lot of the team can't wait for that to happen. Others dread the idea of doing an hour and a half around the M25. It's,
And how do you think it's actually changed your role?
Not much.
No.
Not much, if I'm honest. I spend a lot more time on these type of calls. I think we all spend a lot more time looking at ourselves actually on a screen than we've ever done in our lifetime. But in terms of my role, not really. Probably makes it, some parts of it easier, some parts harder. We did a 2 billion bond issue, as I say, earlier in the last May. And normally that would include a roadshow that would require getting on a plane and going to, Edinburgh, Amsterdam, Paris, wherever. over the course of 2 days, and I was able to do it virtually in this room with the head of investor relations, and it was actually very efficient. We had 2 pretty packed days with back-to-back Zoom calls, but it worked well. We worked together, in fact, on that transaction, Trina. I think you put the deck together, the investor deck together, and that sort of those bits were a little bit clunky, where if you'd be in a room, you'd turn the pages, and to do that electronically is definitely not as easy. But a lot of it was easier. I think keeping connected is the hardest part of this current environment.
Yeah, absolutely. So then bringing on to cyber attack as well, can you talk us through that first from Reckitt and then from a Treasury perspective?
Yeah, I can't say a huge amount on it, to be honest, but the cyber attack occurred in, I think it was June 2017. I was in my office, in fact, talking to our insurance director, when suddenly I heard someone in the background say, "Oh, my screen's gone blank." And then everybody within a few seconds said their screens had gone blank. Ironically, we'd done a disaster recovery plan test on I think the Friday or the week before then, which had worked, which was good. And basically the firm lost, I would think probably around about 50 or 60% of its connectivity. We hadn't connected the Mead Johnson business to our servers at that time. I don't think North America was fully connected. Our head of IT was in the States and it was able to stop that happening, which was good. But the firm lost was effectively out of it, and it was quite a large impact on our trading profit for that quarter. I mean, it took a while to come back. From the Treasury point of view, it was surprisingly okay. It was tough on people because it seems strange to say it now, but suddenly we were all working from home permanently. Imagine that. And we failed over onto a bank platform, so we did all of our operational settlement stuff through a single bank. One of the challenges was, in fact, getting the bank comfortable that our laptops hadn't been infected in a bad way. Our iPhones were working perfectly throughout, so email connectivity and sort of was working okay. And it took us, I actually don't remember now, but I think it was kind of 4 or 8 weeks before we were basically back in the office. Everybody's laptop had to be sanitized, or whatever the word is, virus checked. I appeared before the bank's risk committee on a call, just reassuring them that our laptops had actually been checked and were okay. And on that basis, they allowed us to continue with their platform. We had no major transactions, and we tried to basically de-risk and flatten out or eliminate any position that we had, so that we took the operation very much back to a basic position. So that we could operate normally to the best extent we could.
Okay, so we got just a quick question. Does Reckitt's Treasury team currently focus on any specific KPIs and they could not have done pre-COVID? Do you have any specific KPIs?
We don't. We don't. I mean, our main KPI is to hit our interest budget. We set an annual budget like every business, or a plan, and then we reforecast that during the year. And for ourselves, we're really we're in the hands of the financial markets to some extent. So we agree a fixed floating interest rate mix, again, as you would do with the mortgage, to accommodate what you think the financial markets are going to do. We have a blend of currencies in our debt portfolio that we think broadly matches the net assets and the EBITDA, or the cash flows arising from those currencies. We check in with that on a periodic basis with the CFO and the board if that's required. And certainly when we do any bond issue, we will look at those, work with our financial colleagues to make sure we've got the latest numbers, and set it. But we don't proactively manage. We're there within Treasury. We're there as a damage limitation center to some extent. I mean, we don't want to add to the risk that the group already has. We've got 50 odd factories across the planet, and a lot of different businesses and a lot of different products that have already got risk inherent with them. So the last thing you want a Treasury function to do is really to add to that risk. Our job is to try and de-risk it and to try and help our our businesses work with our supply base, whether that's using supply chain finance or distributor finance, those type of products. We personally are against factoring because we think it doesn't, we can borrow money quite cheaply in the financial markets. And you know, unless there are specific circumstances, it's quite expensive for us to do as a firm relative to our other short-term cost of money.
Yeah. And just on that, you said, and does Simon's team get involved in stress testing adverse scenarios, perhaps linked to those KPIs?
Yeah, we do stress test. We do look at it's more around the quantums of what we can buy relative to the facilities we've got. So we had in our last annual report 5.5 billion of backstop, 5.5 billion pounds of backstop undrawn committed credit facilities. They only have a very single covenant in those that relates to interest cover, where we would have to do something just incredibly huge and incredibly stupid to get caught by that. But we do look at the rating agency metrics, and we do look at our interest cover metrics on a go forward basis as part of the plan. And certainly if we were to see any stress points emerging, we would communicate around those and then try and mitigate that risk to the extent we could.
Okay, good question. Thank you for that. Just back then to cyber, we were talking about that. What were the biggest lessons learned from your perspective?
I think it is this, be prepared, be curious, think about what can reasonably go wrong and how you would react to it. There's no point in COVID testing. I very much doubt that many audit committees would consider the pandemic as a scenario, one of their black swan scenarios, the so-called black swan scenarios. But we sort of look at how much we can absorb as a loss. Whether that's something like a penalty. So when we got a settlement with the DOJ of about $1.4 billion. That was within our tolerance levels. Of course, we'd rather not have had it, but it was a number that we felt that we could accommodate within our existing credit lines. We didn't really have to do very much. In addition to that, we bolstered those credit lines just to make sure that we didn't deplete anything. But we're in pretty good shape. Okay.
So also, you haven't just worked at Reckitt, you've worked all over the world. What challenges did you face internationally in the Treasury function?
I think, the beauty of working in an Anglo-Saxon environment is that people generally will tell you if they think you're stupid or if you're doing something stupid. Whereas sometimes in an Asian culture, confronting can sometimes be quite challenging. I've sat in presentations in Hong Kong where at the end of it I said, was that all clear? No one's asked a question throughout, and everybody said yes. And then I've asked a question that was fairly simple, and they said, no, actually we didn't understand that point at all. Can we do it again? And there is this assumption that because you are the manager or director, or you have the title, or you're the expat, whatever it is, it's changed a heck of a lot over the last 10 years, 20 years. And it changed when I was in Hong Kong. But I would say that is a distinction. Anglo-Saxon culture, I think, is far more receptive to a challenge than some other cultures. It would be my view. And I think within our firm, we're very lucky that people are pretty challenging normally. I think one of the strengths of the group hitherto, that people, no matter what level, if they're in a meeting, they will ask you a question, and if they think you're talking rubbish, they will pretty much tell you that they think you're talking rubbish, and you will have to defend your position, which is, the first time you come across it is quite unusual, even in the UK, but I think it's a strength, a real strength.
So where have you worked, Simon, on the international scene?
Sorry?
Where have you worked? Like which countries?
I spent a few years in Saudi Arabia, in Riyadh, in a place called Taif, which is near Jeddah. I was in Hong Kong just before the handover and just after the handover in 1996 through to, I think it was 1999. Then got seconded down to Sydney in Australia. So I was there for the Olympics, which some people at the time said was definitely planned without any question. And it was a great time to be in Sydney. And I've worked in Europe, quite a few places in sort of continental Europe, if you like. So Germany, Holland. I've spent a fair bit of time there, normally on sort of private equity type transactions. But the rest of the time has been in sort of London, effectively London, Greater London markets.
Okay. So I have another question. Looking into the future for corporate treasurers, what challenges do you see coming from more regs, new accounting standards, digital and crypto, and fintech?
I think fintech is something where you should deploy it to the extent it makes sense. And I don't want to quote any names. I mean, obviously, there's one big supply chain finance company, Greensill, that's in the press at the moment. That's an example, a good example of what can go wrong. And some companies that were using that have suddenly seen their liquidity lines, I think, dry up, as I understand it, from what I read. And I think it's like everything, you just have to understand what you're getting into. So we like fintech where it's supported by a strong funder and where we understand the dynamics of that funder to that particular fintech provider, particularly in the supply chain finance space where we do a lot. Fintech is generally much more nimble than some of the bank solutions or bank tied solutions. So I think that partnership works very well. Crypto, at the moment, it's not something, if I'm honest, we spend any time really thinking about, or indeed even personally thinking about, other than, that you might have wished you'd bought it when it was cheaper. I'm in the Warren Buffett camp, I think, when it comes to this, and I think in some way it will end badly, but I don't quite know how or why. For sure, you wouldn't create money, notes and coins today if you had a free choice. There's no reason why you would do that. So cryptocurrencies need to be much more regulated, I think, to become widely accepted. I know Tesla, have used them, but personally, it's not for us. I think regulations. I was talking to somebody on the association or the institute just before this call started, and talking about risk and regulation and compliance. That is a major part of our job. We have to dot all the I's and cross all the T's when it comes to anti-money laundering, OFAC, sanctions, those type of factors. And we have a single point of escalation, which is, to me, of anything that comes in like that from a Treasury point of view. And I, in turn, go out to our legal and compliance people. We will never, I do never want anybody just to sort of guess an answer to that type of thing. It's far too serious if it goes wrong. And we've all probably had instances where someone's ticked the wrong part of a box, and it can result in unforeseen consequences.
Yeah. So that just kind of leads me on to then for the future of a Treasury function. How do you see it evolving?
Yeah, I think we're going through, as a firm, we're going through a sort of finance transformation more widely, and I think that will create huge opportunities as we, implement shared service centres or consolidate functions. I think there's a lot of technology out there, and I think that needs to be deployed. My own personal view is, in groups like our own, automating things like bank reconciliations, invoice matching, those type of functions, and supply chain finance, and using financing tools to maybe pre-classify your customers into ESG type categories or green type credentials, I think all play a part. I think APIs are, I can see the application. If I'm honest, if I knew exactly what my liquidity position was today, I'm not sure it would make a huge deal of difference if I know it now or if I know it at 3 o'clock in the afternoon. I'm not sure I'm going to change what I do, because chances are I've already done it by that stage, and the market is already closed. But it will improve as banks sign up to it. It will definitely improve. It will definitely make visibility of transactions easier. When money gets lost in the system, which it kind of does on a regular basis, that creates a lot of time. But unfortunately, some of the markets where it gets lost are difficult markets. So we know it's gone to a certain bank, and we know it's meant to end up at a different bank, but we're not quite sure where it is in that bank pipeline. And I think that will all improve. It's not happening in a way as fast as I'd have expected. I mean, blockchain hasn't really had many benefits when it comes to KYC. You can't yet easily verify all your corporate details using blockchain, but it's got great applications on shipping and bills of lading and knowing where ships are and vessels are. So it is coming, and it will play an increasing part. So you need to be plugged into it.
Yeah, talking about the future as well of like green bonds and sustainability. What is your views on those?
We take the view, I personally take the view that green bonds or ESG, first of all, it has to make good business sense. So if your customers or consumers want it, and obviously in our case, not only do they want it, but they increasingly would demand it, then you have to do it. I think, you know, sustainability and saving the planet, or however you want to describe it, is important. You know, greenhouse gases and scope 1 and 2 emissions are simply too high and not sustainable. So they need to improve. But some of the other things around diversity and inclusion also need to improve. We're making, you know, as a firm, we've made fantastic strides, I think, over probably the last year, 15 months, in that direction. And, you know, anybody that looks at Reckitt today compared to, well, RB, as it were, 2 years ago, will definitely see the difference. I think employees expect a softer, more caring environment where they work in, but it has to be good for business. Directly into the lens of Treasury, we think the equity narrative is far more important than the debt narrative. So we think once the consumer side, that we're responding to the needs of our customers and consumers and stakeholders, equity is the major stakeholder. And from a debt point of view, and we see a lot of products that are ESG friendly or sustainably linked bonds and such like, we will put those in as we feel appropriate, and we'll set KPIs that are consistent with the KPIs of the group. You know, we won't set KPIs that are independent of those that we set for our shareholders or to the market more generally. And that's really my view. I think it's there is definitely some tools out there where you can categorize your supplier base by, you know, degrees of how green they are, if you like, or how environmentally friendly they are. But I think it's almost more basic than that. I mean, you know, if you talk to someone like Primark, for many years they've paid attention to where their products are made and how they're made. I used to work for a sports company, and we were constantly looking at factories in places like the Philippines or Malaysia, and just making sure that the work standards there were appropriate. You know, appropriate both locally, but more importantly internationally, because, you know, say it's good for business. I mean, there is massive reputational risk if you get these things wrong, and we've all seen the headlines. So I suspect that Reckitt Treasury, you know, sustainable financing will definitely play its part in major finances going forward. But, you know, we keep very close to it. We think there is a slight sort of pricing advantage as we see things today. And we think it's the right thing to do to the business, and it aligns with our corporate strategy. So I can't see any reason why we wouldn't do it.
Okay. So for the people on the call, I have only a few questions left. So if you have anything you want asked, please pop it in the box. So another question for Simon is, what's the most important lesson you've learned as a group treasurer?
To fess up, to confess if you make a mistake. It's very easy, particularly when you're, you know, I was a corporate dealer at an earlier stage in my career, and sometimes it's very easy to sell something when you're meant to be buying it, particularly when you didn't have electronic platforms that maybe had other disciplines in them. And I think when you do that, it's really important to, first of all, correct it, and then absolutely say what you've done, because people make mistakes. No one's going to get shot for making a routine mistake, whether it's missing a cutoff. But what they will get in trouble for is if they in any way try and cover that up, or try and suppress that information. It's not just in Treasury, frankly. It's in any area of finance, actually, and in any area of life. I mean, when things go badly wrong, it's normally because you haven't been open and transparent with somebody that you should have been open and transparent with. So I encourage that, and we have just a disclosure. If it happens, it happens, and you know, we all know it happens. We look at what are called fails on a monthly basis. We go through a line by line. No one's made to wear a hair shirt about it, but we should learn lessons when things go wrong.
Mm-hmm. My next question is, what is your leadership style?
Well, I probably could ask
I
you
know.
that. I could ask you that question.
I can answer.
Can answer that. So no, I'm pretty straight. I'm direct. I think people know where they stand. I think I won't mislead somebody. I will be as honest as I can be, and sometimes you can't always be completely transparent with information that you hold when you're looking at something, particularly if it's an M&A situation. But I think directness and transparency are really personally quite important. And I think, my own personal side, I have to be relatively resilient and robust, because I've got a lot of people from the outside who are always trying to get a slice of the pie. and when they don't get it, it's part of my job to explain to them why they didn't get it, and how they might be able to improve so they have better opportunities next time. And again, I encourage the team to give honest and frank feedback. And the banks actually, they like that. Because it helps them hone their offer when they look at different clients. So I think actually it works pretty well. Sometimes it can be a little bit too direct, to be honest, but but that's okay.
Mm-hmm. What other aspects of finance do you get involved with regularly?
I suppose investor relations, trying to feed into that message where there is a debt component. We had our credit ratings were put on negative outlook when we had a corporate settlement with the Department of Justice, and that created a bit of noise with the banking group, and obviously the equity shareholders. But just the reassurance with the rating agencies that we're on the right path. I think on the accounting, the Treasury company is a relatively complex vehicle. We have a dedicated Treasury company within Reckitt that's got a Dutch BV subsidiary that we used for some bonds last year, which was a new thing for us. So I get involved in that. I don't try to ever second guess the accountants, because these days they're just far better than me in terms of their knowledge. But you can still, when it comes to disclosure, you can always sort of prod and poke as to whether you've got the right level of disclosure that is actually helpful, but not overly helpful, if you like, because other people, hostile visitors will also look at our accounts as well. So there is always a balance to be drawn there. And with procurement, I have sort of reasonably regular dialogue with the procurement team, whether it's about commodity prices, where we do a little bit, particularly on propane and butane, which we use as accelerants in some of our products, or HDPE, so polyethylene, high density polyethylene, so for packaging. So those type of dialogues. And the supply chain, and that's always within the firm. There's always a fairly, again, it goes to the culture of the firm that they're wanting to achieve one thing and we're wanting to achieve something, and help them do it. But we don't want to muck up the balance sheet, or do something that is non-value adding to the firm just to help them hit a working capital number, for example, if it's in a performance metric. So it's a balance, and that's what you would expect.
Okay. My last question to you will be, what is the hardest and most enjoyable parts of your job?
The most enjoyable part is watching England play Ireland at Twickenham. If they win, of course. If England win, but I shouldn't say that on this call. No, I mean, that's a nice part. We me and some of the team as well. We get to do, the banks get to do some of those things. But I think it's the most enjoyable part really is seeing something done really well, seeing a transaction really well executed, and everybody in the team gets involved. I mean, whether it's the accountants or the lawyers, people that you might not come into contact with too much on a day-to-day basis, but there's a small group of people, and seeing that work well. I think the hardest part of the job is always when it's probably it's people side, when people maybe are struggling, not just in COVID, but struggling with their own work or their workload, and if you can, to try and help people prioritize, because you can't, you generally can't do everything you want to do, so you have to make choices, and some people can take that intensity too far, I think. So to try, if people can help balance stuff, but I think also people have an obligation to shout if they're feeling that they're swamped. Mm-hmm. They need to. They also need to let you know, because I think most people don't spend too much time thinking about that.
Yeah, exactly. So if nobody has any questions, I think I might wrap up. So I just want to say a big thank you for Simon for joining us today. It's the first time you've joined us here at Church Accountants.
Pleasure.
You're very welcome back. The next event should appear on your screen now. There we go. So we have Coffee Roulette coming up on the 11th of May, and we have our AGM on the 13th of May, and we have the Taxing Times, a UK tax update on the 18th of May. And then finally, just a big thank you to Simon, and thanks to everybody for joining today. I hope you found it useful, and thanks to Denise, Siobhan and Jill for joining us.
No, and thanks again, and thanks personally for inviting me to this as well. It's enjoyable. Thank you.
Great to have you. Okay, guys, talk soon.
See you soon.